Hi everyone. So the other day I put up a post saying that Ethereum could go down below $1,000 to targets of 700, 400, and even 200 and something dollars. And a few people said that is impossible. And if you've been following me for a while, you know that anything I say is always data driven. It is not just something I've fabricated and made up. It's always using past data to inform future teaching and knowing where things can go. And just a little life lesson in markets. Wherever you think things can't go is often where they also can go, because that's where, you know, retail capitulation will happen. So the word impossible does not exist in markets. Things can always go much higher than you think and much lower than you think. So again, let's just look at unbiased data, where I'm looking, if we break some key levels, where I would be looking to go. Okay, so before I do, I want to educate you on just a little bit about how markets work. And that way, then once you've got that knowledge, you understand how I'm applying that knowledge to Ethereum right now. Okay, so how markets work is that we know that they zig and then they zag. They zig and then they zag, they zig and then they zag. Every time you get a zag like that, when the market pulls back, it's in the form of different formations, okay? And one of the most common ones is what's called a zigzag. So it goes dirt, dirt, dirt. Okay, so then it takes off and keeps going again. So that's called a zigzag. And how you work out a zigzag is that once you get a wave A, this wave B often will come back to the zag zone, which is the 618382 here. However, in a wave 2, it can come up deep. Okay, so often it's actually the 618 to the 856 up here in a wave 2, because the trend is normally still intact. Okay, so people believe that we're going to new highs, and it can often come deep and come down. So let's say it just came to the Fib 500 here and starts to roll over. Once you start to break this level here and you go down, you can actually project where the bottom will be using what's called Fib extensions. So if you come up here and come to this one here, trend-based Fib extension, what you do is you go from the top here down to there and then take it up to where the zag completed. And what you get is targets to know where it could bottom. Okay, and the common targets are, if it's a short one, it will go to the 618 here. Often, and this is the most common one, is a Fib 1-to-1. You probably heard things like partner legs and stuff like that. That means that this one will come down and be the same length as this one, A, B, C. So the 1-to-1 is probably the most common. The next most common after that is the 1.618. This is what's called the golden ratio. So this is if it gets extended a bit more. This one can happen as well, but it's probably less common than these two. 1-to-1 is the most common. 1.618 is the next most common after that. Okay, so the C wave can come here, and if things get really bad, they can even come down to 2.618. Okay, but yeah, these are your common ones here and here. So you can actually project where bottoms could form just by doing that. Okay, so knowing that a zigzag, once you change structure, you can project where that bottom will go using your Fib extensions. I'm going to show you how Ethereum has followed this every time since existence, and how I'm going to use that now to project where it could go in future now. Okay, so let's wipe that clean, and let's use Ethereum right now to project where we've gone. So this was the bull market here in Ethereum. You can see zigzag, 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 zig, and then you see this move here, lower low, lower high, lower low. So remember how I said what you can do is you can project the distance. So once it breaks the structure, you can project where it might bottom. So we're going to get our trend-based Fib extension. We go from there to there to there. And what do you notice? It comes down to the 1.618. Okay, so that is how you then got an A, B, C, got your bottom of your target there. Okay. So as you can see, the 1.618 worked really well for the ABC on that bear market. Then we've come up again, bull market, high, 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 low, high, high, we go up. And then you can see we've had a recent change in market structure down. So same thing, you've got your lower low, lower high, lower low, change of structure. If you get your trend-based Fib extension, go down, send it up to your B. Again, what do you notice? It's come down to the 1.618. Okay, so Ethereum loves the 1.618 on its projection. 1, 2, 3. Okay, here, 1, 2, 3, 1.618. Okay, coincidence? Once, no, twice, maybe. Let's look at a third time right now. Okay, so what I've done now is I've shown you now that's come down to 1.618 ABC. It's moved in 3 waves. Right now, we have only moved in 3 waves. Okay, so from there to there to there, what have we come up to? 1.618. This is how I was able to get the top back in March. Okay, this is how I knew that we weren't bullish yet because volume wasn't confirming this move. So right now, all we have done is go A, B, C, and at the moment, all we've done is go A, B, and C up to here as well. So at the moment, we've only moved in waves of 3. Okay, there's a rule in Elliott wave, which is where wave 4 can't enter wave 1 territory. That is wave run right there. Okay, right now we haven't. We came super close. It wicked down and got it, but we're still in. If we were to break below $2,000, that would confirm this being a corrective move and a 3-wave move, which means that then we have on a bigger scale an A, a B, and a C. It's actually not called an ABC, it's called a WXY. And in Elliott waves, WXY is where you have a 3, a 3, and then a 3. Okay, and ABC is actually a 535. So similar thing. It's going to be a zigzag, but it's a more complex one with a WXY. But what I wanted to show you now is here, from there to there to there, you can see these were what I talked about, my targets. Fib 1 to 1, 746, 1.470, or what Ethereum loves is the 1.618. So as you can see there, that 1.618, which also happens to align perfectly with this major resistance support zone here, it would be the golden ratio that at the moment Ethereum loves. So if you're saying it's impossible for Ethereum to get $261, you don't understand data, okay? Your emotional bias. So all we can do is follow data, okay? So while it's above 2,000, there's nothing to worry about. But if we were to break $2,000, then these targets very much come into play. You're probably thinking, well, hang on, this thing's come so far up though. Okay, let me show you what it's come up to. It's come up to the 85.6 retracement. Okay, 85.6, which is a deep retracement, which is where often it can come down to. Okay, so it's come up deep retracement right now and fallen away. At the moment, it's been bought off the 618, which is a major resistance support. It's supposed to get bought there. Okay, so at the moment we're okay, but if we were to fall through and then break through that 2,000, those targets come very much in play. Let me show you an exact thing right now that's happening with that using something else. Apple. Okay, let's look at Apple back at the GFC. Okay, so can you see here, we've corrected and look, a very deep B wave. Everyone would have thought this was a new bull market. Look at what it came back to. Again, the 85.6, exactly the same as Ethereum. Okay, now let's use our little magic trick. Okay, so exact same way Ethereum is now, 85.6 for a B wave. Let's use our trend-based fib extension, down, up, and what do you notice? Comes down to the 1.618. Okay, let me just try that again. So from there to there to there. Okay, so this one, A, B, C, down to the 1.618. I bet you $1 million when Apple was $7.30, everyone would have thought they were crazy that it's never going to $2 something again. Okay, especially here when it was, everyone would have thought new bull market structure still intact. Okay, but using your measured targets, you can project where things will go. Okay, so right now, this is what could be happening on Ethereum. So not only have I shown you that Ethereum loves a 1.618, that it's now rejected the 1.618 going the other way, but I've shown you a live example on something that's bigger and better than Ethereum, Apple, that has done the same thing. Okay, so it is very much in play. Everything I always do is data driven. Okay, but like I said, it only happens if we break below the that $2,000. And the rule for that is because how markets move is that you have 1, 2, 3, 4, 5 up, then you correct the whole move. This wave 4 can't enter wave 1 territory. So if we ever go up and this comes down, then that's when you know it's a corrective wave, unless it's a leading diagonal, which this can't be. So that's where we know it would be corrective, and then we're looking for further downside. Okay, so for me to even flip remotely bullish on this, I would need to see, first of all, I want to see this neckline break back again. Okay, again, that's the bearish case I've shown you. Let me now show you that there is a bullish case as well, in the fact that we have come down to the 618 here, and we've bounced off our resistance, that support. Okay, this is the line in the sand that we're looking at here. So see, we never crossed it. So wave 1, wave 2, this could be wave 3. So what we could have is that we've had wave 1, wave 2, this is wave 3, we've come down for 4, and then we're going up for wave 5. Okay, but this shouldn't come into the territory. So there definitely is a bullish case, and I'm just making you aware of what could happen if it breaks below $2,000. Okay, so if we break below this level, we start breaking below major resistance support out of our zag zone here, then things get a bit nastier. Okay, if we can get back above here, back above 2,900 would be a good sign, because although that trap money should become sellers, if they're not, good sign. But ultimately, I need to see it get back above 3,500. If we get back above there, then yes, we have upside targets. Okay, so it's not about being a bull or a bear. There is no bull or bear. It's just about being on the right side of the market. Right now, the right side of the market is down. Lower low, lower high, lower low. Okay, however, we are at an area where it could bottom. So as more data unravels, yes, it could turn around and go. But right now, no, it's in a downtrend. Okay, so it's all about knowing your key levels, where to get out, and just knowing that, you know, if you're like, oh, I'm already down 50%, how much lower can it go? I've just shown you how much lower it can go. Okay, if we break some key levels. Okay, but really, if it breaks below that 2,000, that starts coming play. And then obviously if it breaks below here, okay, 1,500, then things get really bad. The chart that you also want to be looking at is any altcoins that you're buying. Make sure you're always buying the Bitcoin pair. Okay, so don't look at the USDT pair, look at the Bitcoin pair, because why do you buy altcoins? Why don't you just buy Bitcoin? So the reason why you're buying altcoins instead of Bitcoin is because you go, oh, I've missed Bitcoin. I want something with more upside. Well, if it's got more upside, it should outperform Bitcoin, which means that this chart should outperform it. Okay, so at the moment, this thing topped out. This is where you wanted to own Ethereum here. Okay, it was outperforming Bitcoin. It topped out here, end of 2021. Since then, it's been in a bear market. Okay, we haven't been in a bull market. This thing needs to move into bullish market structure, break some massive declines before we start moving into some form of bull market again like this. So why would you own Ethereum over Bitcoin when it's in a downtrend against it? You wouldn't. Okay, you only buy an altcoin if it outperforms. You guys know I've preached, Render at 50 cents, Sol at single digits, and then again at $20. The reason why is because of the Bitcoin pair. Okay, so if you look at Render Bitcoin pair, okay, it changed bullish market structure back here. Okay, so it's in an uptrend against it. It still is now. Okay, that is why Render has performed so well, because it's outperforming Bitcoin. Same with Sol Bitcoin. Okay, from here, higher high, higher low, it changed market structure here. Went into an uptrend against it. That is when you want to own Sol, not the other way around. Okay, you don't want to own Sol when it's in a downtrend against Bitcoin. You want to own it when it's in an uptrend against Bitcoin. All right, so I'll do a video on Sol again now. Same thing. It's either going to break up and be really good. If we break below some key levels, then it could be bad for Sol as well. But at the moment, structure is still intact. But if we break some key levels, then watch out on Sol as well, because we're at a key zone, which I'll explain in future videos. But hope that helps, guys. It's just about, it's just about being aware. When you're aware, preparation is the key to success. You never get caught off guard. Okay, so aware that if we break those key levels, they're the downside targets that you can get to. While we're above, we're all good. And then also just looking for those key zones to break to then know, okay, Ethereum will outperform. I should be in Ethereum over Bitcoin then. Hope that helps, guys. If you like the video, please like and subscribe, and let me know what you'd like to see in the next video. Cheers, everyone.